what's up, everybody? It is Thursday, May 3rd. June 3rd. Sorry. All right, so market down today. We had I'm going to talk about, I have concerns, but let me just go over the numbers today. Big ADP payroll number, 978,000, way above expectations. I think the forecasts were like for 615,000. Tomorrow we're probably going to get a big number in the BLS number, the government's number. You know, last month, remember, there was all this, the number was terrible. Look, there's a lot of volatility with these numbers. This was a good number. This was a good, strong number. And weekly unemployment claims fell below 400,000 for the first time since the pandemic. So these are good, strong numbers. Plus we had some other economic data that was very strong. So why was the market down today? That's a question you might be asking yourself. It's a question you might want to ask me. I have concerns, and I'm not so sure that the sell-off today has anything is related in any way to what, my concerns are. But it sold off nonetheless. I've been talking about this now. Look, the economic numbers are good. The fiscal flows are strong. But this is the month. I mean, I've been talking about this now, and I'm going to bring it to your attention again. We are going to see cuts in unemployment benefits this month, 21 states, and then 2 more in July. That's almost half the states in the United States. They're going to be ending the enhanced unemployment benefits. And as you know, I've been saying that I think this is not going to turn out very well. Now, let me just qualify that statement by saying if we do get an infrastructure bill, and it looks like, negotiations are still going on, Biden threw, an enticement in there today when he scaled back his 28% corporate income tax. He brought that way down, so he threw that in as an enticement to the Republicans because that was never going to fly. And I said that way back. I said those tax increases are never going to fly. We really have to be focused on the spending and the investment, and that was big and that was huge. So that news came out. The market was down significantly, not significantly, but it was down on the open and then rallied back. But I'm selling into this rally. I am concerned. For the first time, probably in a very long time, you're going to hear me say, or you have heard me talk about these cuts in benefits. And again, if we get the infrastructure bill, if that passes, I think we're clear. If we do not get that, then I think we're really looking now for the next several months, at least into the new fiscal year. That's October 1. It could be a pretty rough ride. If what I think is going to happen, if that happens, these cuts, and again, the states that are doing this, and the states that are pushing this through with the idea that it's going to get people back to work, I think they're going to be surprised, and not in a good way. I mean, there are jobs out there. They're low-paying jobs. You take away the benefits, there's going to be a rush of people. 2 things are going to happen. Number one, there'll be a rush of people, presumably, I don't know, maybe some people will, who knows, but let's assume there'll be a rush of people to fill these jobs. They'll be filled up pretty quick. The income in these jobs, I have to imagine, is less than what they were getting with these enhanced benefits. Otherwise, why are they staying home? So income flows will be reduced. We know income flows will be reduced simply by virtue of the cutoff of these benefits. And then what happens? Less money in people's pockets means less consumption, means lower sales and lower profits by companies, by business. Maybe by the very businesses who pushed their politicians in these respective states to, cut these benefits. What happens? Their sales go down, their profits go down. What? Then they have to lay off the people that they just hired, the ones that they, pushed politicians to get off the dole. I mean, the whole thing to me seems like there's a big risk. And it's the first time, really in years, because the flows have been increasing steadily yearly. And then we had the pandemic, which could have been disastrous for the economy. But the pandemic was met by the proper fiscal response. We know that. The economy stabilized, started to come back. The only thing really that kept it from coming back in full was a lot of places were still on lockdown. But the fiscal support stabilized the situation. Obviously, the stock market went way up on the fiscal support because, like I've explained many times, those flows, a large percentage of those flows go to corporate profits. It doesn't take a rocket scientist to understand that when you increase those flows, corporate profits are going to go up. Now you are cutting those flows. That's 10 billion a month of income flows. I just don't see how that's going to be a positive. Now, I could be wrong. Maybe the net effect is not going to be that impactful. But there is a risk here. And the other thing is sentiment now. I sent this out earlier today. If you look at the AAII weekly sentiment survey, bearish sentiment is the lowest in 41 months. There are no bears out there. Now, normally, I would look at that in the context of what's going on with the fiscal picture and say, okay, I mean that, it may stay like that. Just like bullish sentiment was elevated for a long time. And I had no problem with that. I never gave a sell signal because of high bullish sentiment, because I saw, you have these massive flows that can sustain. This is where a lot of people got messed up. A lot of, smart people on Wall Street. They kept trying to sell. They kept trying to sell. I kept saying, you cannot sell. This is like a tsunami of fiscal support. But now that this is being cut, and again, maybe it's not going to be consequential. Maybe the amount of these cuts will be, at a level that the economy can handle. I'm going to see these numbers. And the numbers are not going to start until mid-June. I mean, June 12th, you got, 3 or 4 states that are going to go in on this, and then it's going to roll out over the period of the month. So, I mean, we could still have, a buoyant market until then. Until the full effect of these cuts are felt. But I'm not comfortable with it. I'll be honest. I think it's a bad move. I think it's the wrong move. I think the states that are doing it are going to be hurt the most. But the national economy will feel it. Not just those states. It'll trickle through the national economy. And the stock market is elevated. Valuations in some instances are stretched. I know a lot of people are on the fence, and if it starts coming down, they're going to sell. So, I mean, all the elements are there. We got to keep an eye on it. The numbers are still good. The economic numbers are still good. All right? But it's not about, what happened in April and May. It's about what's going to happen in June, what's going to happen in July, what's going to happen in August, what's going to happen in September. That's what you have to be thinking about. All right? One more thing. Oil today, the EIA report came out, the weekly report. A pretty good dip in gasoline and distillate demand. I mean, that dropped. So that caught my attention. Crude inventories were down. Gasoline inventories were up. Distillate inventories were up. Gasoline production right now is at an 18-month high. And inventories are starting to build. And demand just dipped in a week leading up to the Memorial Day weekend. And this is happening even before we're about to feel the effect of these benefits cuts. So think about that. Anyway, that's it for today. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye.